Uh, I think companies that were willing to hear that they could be valued at uh, unsustainable valuations is actually more harmful and doesn't do you any good, right? So, if and we've talked to companies now 5 years later who said, "Yeah, I was offered $1 billion of a SPAC, but I knew that wasn't a real number. I knew I was only worth 300 million." And they had the understanding that that would not have been helpful to do. And here we are 5 years later, and they might be valuing themselves at 5 or 600 million. And you're like, yeah, you really grew into that valuation, still less than that crazy number. Uh, and so, the the aspirational valuations that were being applied back then did more harm than good because no one was able to cash out at those. No one was able to put that money into a bank or raise a ton of money sustainably off of that. So in today's market, have reasonable expectations of valuation, right? And if the market doesn't align with what you think it is, then don't do it. But don't try to push it, right? Because the SPAC process allows you to create this mirage of a negotiated value, right? But that's just two parties. Then, the market is made up of millions of participants who's going to set a new value for you. So, the pipe process allows you to get some market clearing understanding, but that's one way of kind of determining some value. But yeah, be thoughtful around valuation. And that's not a sponsor trying to buy you cheap. Our process is to be consultative. So we're not going to tell you that you're a certain price so that we could buy you cheap and make money. It's to help you try to understand how the market's going to value you. Because to be successful, you come in with an equal understanding with the market, and then you grow from there through execution and results.